depositors. Now, what? Hello everyone, this chapter will basically be about understanding the entire structure of financial markets. Suppose you need a loan. You go to the bank gives you the loan from deposits done by its customers or the depositors. Now, who are these depositors? These depositors are its customers, who is one amongst us only. So, this is the cycle where everything ends up to one another. The financial ecosystem that we are part of is dependent on each other. It means a system where various participants like buyers, sellers, government, producers, consumers, they all have developed a flow of events to channelize the smooth flow of various processes. So, for instance, a manufacturer produces a product, he passes it on to the wholesaler, then a wholesaler sells it to the retailer, a retailer then sells it to the final consumer. But these days, due to online availability, the products are directly available to the consumers. The middlemen or the intermediaries have got reduced. Okay, so we were talking about the processes, and one of these processes is capital generation or flow of money. Now, there are two ways of doing so. One is going to the banks or financial institutions that we just discussed, and the second method is through financial markets, which is a place where buying and selling of financial assets takes place. Now, what are these financial assets? Financial assets are the shares or securities or commodities or currencies that are traded in the market. Now, going forward, just like we have the Prime Minister, who is the apex body managing the entire country, similarly we have SEBI, which is the apex body governing the rules and regulations of the working of stock market. So SEBI, that is the Securities and Exchange Board of India, reports to the Finance Ministry. It was formed basically to regulate the stock market in every possible manner to govern the interest of the stakeholders. So basically, a financial market is a medium that facilitates the transfer of funds from transactions in financial markets. Now, this is another major component which is itself a very huge domain. Okay, now we will focus on financial markets here on, as that is the core area of our subject. Now, there are various types of financial markets in India, but our focus from that financial market will be in capital markets. So the capital market is the place where the financial assets that we were talking about are bought and sold or are traded. Under capital markets, our discussion will be more or less around the stock markets as well. Also, this capital market is again divided into primary market and secondary market, which we will be understanding in our next unit. In the previous unit, we understood how capital markets are an important part of the huge financial ecosystem. Now, as I mentioned earlier, that there are two types of capital markets, which is primary market and the secondary market. Now, there are various ways in which capital can be raised in the primary market, and one of the ways is through public issues like IPO and FPO. Now, IPO is the initial public offering wherein a private company raises capital by issuing new shares. And then there is the second method, which is FPO, that is follow on public offer. FPO is done to raise additional capital by a listed company. This capital can be required for several purposes like working capital requirements, expansion of the company, then paying off the debts, and likewise, or it can be for starting off a new project also. We will study in detail about this IPO thing in the IPO chapter. Now, basically, the primary markets are where firms directly raises capital from individuals and institutions in exchange for the firm's securities or shares. So, suppose ABC Limited raises an IPO. Its IPO gets fully subscribed, but you did not get the shares from it, though you had applied for it, but you did not get that subscription or you were not allotted for those shares. So does that mean that you will never be able to hold the shares of ABC Limited? Well, you can still buy the shares of ABC Limited in the secondary market. So this means that after the shares of a company are listed, its shares are available to be traded in the stock exchange. So this marketplace where the shares are bought and sold through electronic medium is the secondary market. Secondary markets are basically the various stock exchanges like the NSE, BSE, etc. After this, the next unit will be about who are the participants in the stock market. Now, in any transaction, there are three people involved, which is the buyer, seller, and the supplier. So, when you go to a supermarket, the supermarket is the seller, the supplier is the dealer or the manufacturer, and I am the buyer, like you and me are the buyers. Likewise, in the stock market, there are three types of participants. You, who is the buyer, company, who is the seller, and to facilitate this entire process is the stock exchange platform. Now, this entire chain has several financial intermediaries working along. So, I am a buyer, which means I am an investor. Now, I can be the financial institution as well. Okay? So, we had studied this in economics that capital is the lubricant that keeps the economy moving. And this capital is floated by the investors. Based on the amount of wealth that they invest, investors can be categorized as retail investors, high net worth individuals, and the institutional investors. Retail investors trade from their personal or demat account, like you and me. Then there are HNIs, which is high net worth individuals, who are also the retail traders, but they transact in larger amounts like Rakesh Jhunjhunwala, Vijay Kedia, etc. And then there are institutional investors, that is mutual funds, insurance companies, banks, financial institutions, and foreign institutional investors, etc. are a part of institutional investors. Now, as we know that retail traders trade for themselves and they do not trade for someone else. So what if you want to get your personal account or demat account managed by someone else? For this, there is a stockbroker. Now, a stockbroker is an intermediary to facilitate the buying and selling of securities in the stock exchange, for which they charge brokerage, okay, which is the commission they charge. We will discuss about brokers in detail in the next chapter. Now, there are these depository and depository participants. So, when you transact in shares, they are the ones who hold it and exchange takes place there. They basically maintain everything related to a transaction. So basically, the financial institutions that hold the securities electronically for investors are known as the depositories. In India, there are two stock market specific depositories registered with SEBI, which is NSDL, that is National Securities Depository Limited, and CDSL, which is Central Depository Services Limited. Now we have the Clearing Corporation. Now the Clearing Corporation is basically in charge of ensuring that all the participants in stock market meet their obligations to deliver funds or securities. Okay, so they act as a legal counterparty, which are important to all the trades that are executed in the stock market and guarantee the settlement of these transactions. After this, there is a custodian to safeguard the securities that are being traded. So these were few of the major ones which were important for you to know. There are other market participants as well, which you will learn in due course as we proceed towards the upcoming modules.